Hello, I'm Liz Lumley of Finextra, and today I'm speaking to Penny Hembrow of CGI, and we're going to talk about global transaction banking. So my first question for you is, what are some of the trends the industry is talking about currently?
So we've just interviewed 125 banks around the world exactly on this topic. And what they're saying is three things. They're saying, first of all, this is an area of profitable growth for them. So it's an area where there's lower capital consumption, there are strong client franchises, and they see the opportunity for growth and profitable growth. That's the first message. The second message is that this is an area of innovation in the services to their corporate and financial institution customers. Now that's being driven by a number of things. One is integration, business to business, so the business to the bank. How can you streamline and make that more efficient for their clients? The second is about standardization, and we've heard about the efforts, particularly in the payments industry, to standardize things like remittance advice. And that's lowering the cost of service to the corporate, and the corporate wants to be able to deal far more efficiently in the transaction banking space. And so there's innovation of services in that space. And then the third thing is that in corporates are the same digital consumers as there are in retail. And so we're seeing the strong desire for portals and cross-service portals and value-added services being delivered direct into the corporates and financial institutions online. And then the third aspect is about security. So consistent with other areas of the banking world, there is increased concern about cybersecurity and resilience of their platforms. And so there's increased urgency about how does the banking industry protect itself from cyber attacks.
So Penny, in reaction to these trends, what are some of the business and IT implications that people should be focused on then?
Well, on the business side, it's very much about margin. So what they're looking to do is about understanding their best margin clients. So there's been quite a lot of streamlining of who they deal with and who are included in their client franchise and who has not. So there's been a redistribution to really improve margin from a client point of view. They're also talking about product standardization. So we would have seen 5-10 years ago in that kind of time frame a lot of local products and services, specific for a certain geography. Now we're talking about much more standardized products worldwide being offered by transaction banks, and that's because they want to standardize their applications. They don't want to have complex infrastructure which takes margin out of the business and it's an area where they want to improve. So there's a lot of work going on creating utilities for payments and putting in single trade finance platforms. But also we're seeing roadmaps being developed because banks nowadays don't want to replace their payments engines, or very few of them do. If their parts of their payments engines are correct, then what they're doing is they're rationalising and then adding best of breed components and then doing things like putting intelligent gateways in the front of them. And so they're developing roadmaps to adapt what they have, modernise it, streamline it, reduce the costs of it, as well as adapt to the new standards coming through. And of course, there's still all the regulatory changes coming through. So a lot of the IT spend is going on making sure that they comply with the regulatory changes. And then, of course, because corporates are developing their consumer behaviour, is that there's investment going into corporate portals. Now, there have been corporate portals before, or their client portals, but they've been very much product aligned, and so they're looking about how can these become value added, how can these go cross-service.
So Penny, looking forward 2 to 3 years, what should transaction banks be focused on?
Well, they expect to see quite a lot of innovation in the market, really driven through standardisation. In fact, corporates, rather than the regulators, are driving the pace of this because they want to see far greater efficiency end-to-end in their supply chains. And so the pace of adoption of new standards is being driven from the clients rather than from the regulators. And so what we're seeing is the speed, the real timeliness of the end-to-end is all increasing and being streamlined. So what's going to become very important for transaction banks is agility and the ability to deal with those speeds and volumes of transactions. And so we're starting to see people interested in how do I adopt agile infrastructures. So really moving away from in-house engines and old data centers and things like that, and much more to modernized services in the cloud, services exposed through portals, agile infrastructures and value-added services, particularly data and intelligence driven, back out to their customers, so that in the end, those customers can effect much greater efficiency themselves and better working capital management.
Thank you very much.
Thank you.